Jonathan is the principal of the AIM Group, has been a long-time presenter here at the conference, and today he's talking not about AI in particular, but I'm sure you'll touch on it, but he's definitely going to talk about everyone's buying property portals, because we've seen a bunch of transactions over the last 12 months. Are they worth the money that's being paid? So thank you, Jonathan.
So, sorry. I'm going to talk about the valuations of property portals, and from what we see in the figures in public data, can we justify the kind of values that are out there? Just before we kick off, for any of you who don't know us, the AIM Group, we're a business intelligence service for marketplaces. In the real estate space, we have an online subscription to our service, as well as enterprise subscriptions. We don't do a conference in property because we leave that to Simon, but we do the equivalent conferences in the cars and the recruitment markets. And we do a little bit of consulting. And really, much of the data here is because recently we've been doing, in the real estate space, quite a lot of work around benchmarking, quite a lot of work around pricing and understanding the way different portals work relative to each other in terms of how they deliver their commercial end results. And so this is some of the data that's kind of fallen off the back of that work. I want to say, before we kick off, and you'll see this when I quote some different figures to Malcolm, as we always manage to calculate things in different ways, most numbers, to do anything interesting with them, you have to put a bit of estimation in. And also, the sources are not always perfect, so you have to make some guesses, etc. So the numbers that I'm going to present to you, I hope, are pretty good. I hope we've got enough experience to estimate the estimates we need well, but I'm sure some of you are going to come up to me afterwards and say, oh, well, that's not quite right, or whatever. And that's good, because that will improve my data for the next time. So we've had something like 6 either acquisitions or potential acquisitions in the last 12 months. Top of the list, going in kind of order from earliest to latest, is CoStar and On the Market. Clearly, stated intention of challenging the number 1. I guess we're kind of skeptical that from a number 3 you can challenge the number 1. We haven't seen it happen anywhere successfully other than by a very bad mistake by the number 1. We think it's much more likely that it challenges the number 2, and then perhaps a further acquisition comes along. But having said that, every time an analyst has bet against Andy Florence has come out on top. So I stand to be proved wrong, and Andy's speaking on Thursday, and it'll be interesting to see what he has to say about the UK side. Next one along, General Atlantic and Funda. Funda is the agent-owned business in the Netherlands. General Atlantic did an absolutely brilliant job, as you've already seen, of taking Hemnet to market, and this is really a process of repeating that trick, hopefully with Funda. We've got Cinven that has bought Idealista. This is kind of what we call private equity pass the parcel. I think they're the 4th private equity owners. There was Oakley, Apax, then EQT, and now Cinven owning. The question is, will it go on a few more times around the pass the parcel loop, or will the music stop and lead to an IPO at some point in the near future? We've got dead as of Monday, REA Group trying to acquire Rightmove, and I'll speak a little bit more about that in a minute when we get to multiples and so on. But we've seen this as something with limited strategic rationale, really very financially opportunistic. And I think you can see from part of the response from REA's shareholders that, and the markets in London, that others have seen it in the same way as well. We've got EQT buying Property Guru. This is really very unusual, 2 years after a flotation, an IPO. Property Guru has consistently failed to meet its projections, had a bad time on the market. It's gone back into private ownership at 40% discount. It really should be a good property to grow over time, and this really brings kind of focus back to it, away from the gaze of the market. And then we've got a sort of slightly odd one, which is KKR, separating out from Axel Springer, the marketplaces business, including Aviv Group, which really gives it unambiguous control, no confusion over priorities between the news business and the marketplaces business. And we would see that kind of driving a much clearer strategy for Aviv and the other marketplaces businesses of Axel Springer. So, we've got 6 different potential acquisitions and potential acquisitions here. We've got different parties, we've got trade, we've got private equity, we've got different parts of the world. There is one thing that absolutely kind of ties them up in common, and that is a belief that property portals still have very substantial value. And so, if we look at multiples, and this is looking at enterprise value multiples, so enterprise value is effectively the true value of the operating business minus kind of any kind of conflicting financial kind of information. We see that even if you're a kind of number 2 business, you've got a pretty good multiple of 15 times EBITDA. If we move on and look at the mature markets in Europe, we're seeing multiples of about 17 times. Now, these are lower than they've been at their peak, and that's partly the overhang of the CoStar kind of threat within the market and other factors that have come into play. If we look at where REA got to in bidding, they got to 22.7 times as a multiple, and we think that the Rightmove shareholders roughly wanted 24 times as a multiple in order to buy that business. So we've got some kind of pretty hefty valuations. But if we go on further and we look at Property Guru, these numbers were all end of 2023, so we've got a comparable basis for them. At that time, Property Guru was at 26 times multiple. I would argue that was a low multiple for what it was at the time, reflecting its poor performance rather than its potential. It was taken off the market at something that would potentially have been a much higher multiple, but you can't really calculate it as it was loss-making at the time. So it's debatable kind of where you'd put it. We then move on. We've got Idealista, which is much earlier stage in terms of its development in its markets than Rightmove or Scout, and is changed hands with Cinven at a 31 times multiple. And we've got Zillow in the States, really reflecting the huge potential of the American market, also up there trading at a very high multiple. We've got REA in Australia. We would say that the multiple is so high relative to the Europeans, even though it's a well-established business, because it's totally dominant in its market, totally consistent in its performance. It has some real potential in Asia through its acquisitions that can come good at a later stage. And then there's the vendor-paid model, which has the potential to push its revenue delivery further. And then we've got Hemnet, the absolute darling of the market. You saw where it sat on Malcolm's chart. More than twice the growth over the last 5 years of the mature Europeans, and a massive 45 multiple at the end of last year. So you can see there are some really kind of pretty high multiples. So what do you need to believe that these multiples are valid? So the number one thing you have to believe is that take rates, and particularly the take rate from estate agents, is nowhere near its ceiling, because you've got to get some very substantial growth. And irrespective of the fact that businesses are focused on producing new revenue streams, if I go look at REA, 90% of its revenue comes from either agents or new developers or commercial property agents. Only 80%. Only 20% comes from other revenue streams. And then if you look at areas like finance, REA's built the beginnings of a very interesting mortgage business. But at the moment, that business is only 5% of its revenue, but turn that to profit, and it's only 2% of its profit. And it acquired most of that business, so its starting point is something it had to pay for. So you've got to believe with those businesses that you've got some really good organic growth coming to believe that those extras are going to add much. So right at the heart, you've got to believe that the core agent revenues are going to grow very strongly. And if you look at Rightmove's projections in its last CMD, it said of its next 5 years' growth, 60% of that would have to come from agents. Over the last 5 years before that, 70% of it had come from agent growth. So that's why the ceiling on take rates is so important. Can they continue to go up? You've probably got to believe, you can model this in different ways, that you're going to see EBITDA, which is roughly cash flow profit, going up at greater than 10% a year for the next 5 years or so, and then make assumptions beyond that reflect continuing kind of decent performance. So you've got some pretty high growth expectations you need to achieve. And that greater than 10% works at about the right move desired price of kind of 24 times multiple. You've got to believe that real estate marketplaces are going to continue to be robust through economic cycles, and I'll show you later that they have been pretty much so to date. You've got to believe that the competition really isn't going to damage them. You know, we're talking here, most of these businesses that we're talking about are the big number ones, they're way out ahead, they're dominant, etc. That's where the real value lies. Can they really be touched by the number twos, or in CoStar's case, the number three even? And you've got to believe that new technologies that AI aren't going to destroy these businesses, disrupt them, bring serious problems for them within a certain kind of time frame. So those are the 5 things we'd kind of say you really need to believe to back these kind of valuations. So I'm going to go through those and look at them one by one. So a traditional take rate is calculated as the amount the marketplace makes from agents as a share of the agent commission pool. And as I said, the numbers are quite hard to calculate in some ways. We have to put estimates in place. We have to use data in the marketplace. So, you know, Idealista, we'd calculated about 4.3%, just looking at its Spanish business. Rightmove, we'd calculated about 9.6. I think Malcolm said 5 point something. So you can see, again, the differences of how you calculate, what assumptions you use, etc., can be quite different can make quite a difference in how these numbers go. So, you know, you're taking in the higher performing, not higher performing, the higher take rate markets, something like 10% of an agent's commission. In the lower take rate markets, you might be taking 3, 4, 5% of an agent's commission. So it seems quite comfortable to assume that the ones where you've got 3, 4, 5%, you can grow that commission, that share of the commission quite substantially. What about a Rightmove where you're at 9, 10%? And the top take rates commission levels are typically at the moment about, you know, just going into double digits. What we see, and I could show you, but I haven't got them here, you know, you'll see that the companies that are at those take rates are still, you know, typically growing at double-digit revenue growth rates. So there's no indication around this rate that they're slowing up. I think as well, if you think about it, you know, probably marketing is the biggest job the agent has. Most of their activity is going to come out of the portals. You're paying around 10% at the moment for all of that value. Does it feel like an unreasonable equation? And even if you're an agent, it did feel like an unreasonable equation. Is there much you can do about it in reality, given the options available to you? You know, where you've got big dominant marketplaces. And I would argue, actually, it's pretty good value. But if you think about it, commission, you know, we tend to talk about take rates as if there's a fixed pot of money that you take out of. But the reality is, and we should see this on the next slide, that commission rates of agents vary substantially by market, by local conditions, etc. And actually, they're quite flexible and malleable things. So in reality, if we continue to push up marketing costs, actually the commission rates will change within the market to reflect that. And there's an ability for the agents to take on a different kind of structure and balance within their costs. So we'd argue very strongly from the evidence we see that we are nowhere near the ceilings on take rates. What you have to do, I think, though, in order to keep marketplaces, you know, working steadily in the market, is have good justification for why and how you're growing those the take from the agents. So, looking at commission, this is a chart that shows on the left-hand side the average value of a house in the country, converted to US dollars, and along the bottom the reported commission rate in the country. And some of these are publicly reported, some of them are conversations we've had with players in the marketplace. So the data is from all over the place. It will have sort of, some of it will be slightly better in quality and otherwise. And, you know, if you look at it as a human, you think, well, yeah, there is a slight kind of trend here. You know, you'd expect it to be, you know, the commission rates to be lower, the higher the average value of the house is. But what you see, you know, this trend line if you look at the R-squared at the top, which measures the degree of fit, it's a really poor fit with the data. There is no real substantive trend in here. And even if you took out the outliers, there is no great trend in what commission rates are. And I think that gives you a sense that commission rates are actually very malleable. And, I think the Germans were mentioned earlier. In Germany, you've got typically a 5% commission rate. I was aghast at this, given the average property price in the country. I talked to Katja, my colleague who's German. She said friends of hers have just bought and paid 7% commission. So the buyer 3.5 and the seller 3.5. So it checks out that it's that kind of rate. So, commission is clearly flexible and it's clearly adjustable to market conditions in interesting ways. We don't like calculating take rates based on commissions because we think a lot of this data is actually very weak. So if you look at these three columns here, you'll see they're 2.5%, 3%, 4%. They're the kind of generally accepted commission rate, average commission rates in those markets. But all of those markets have negotiable commission, so we know that it won't be exactly those numbers. We know that the number will be something different. Almost no country actually in any useful way brings together commission data. So we try and avoid that in our comparisons wherever possible. So our preferred way of comparing marketplaces is to say, well, what does the marketplace's revenue per home sold by an agent look like relative to the house price in the market? So think about that. That's the money the marketplace makes per home sold by agents in a market divided by the average price. And you get to a much more interesting kind of comparison than you do if you do the same thing with take rates based on commission. Because you find actually there's a relatively narrow band. And interestingly, if you look at this measure, and I compare Idealista again with Rightmove, we find actually, because of the very low value of houses in Spain, Idealista is actually taking a significantly higher portion of the house price than Rightmove in the UK. Rightmove comes out low on a commission-based take rate, as commissions are very competitive in the UK, low 1% rate. In Spain, we're told they're 4%. Can we be sure they're 4%? Market players tell us they're 4%. We can't be. But this gives a much more solid view against the kind of standard benchmark. Now, one number clearly sticks out here, which is Germany. And you can see that actually probably the commission rate, the unusually high commission rate, does have a real impact on this metric. It's the most difficult number to estimate, as the German figures are very vague, and Scout hides its agent revenues now, burying it along with its commercial property agent revenues as well. But we think, that this is an example of pushing this number higher, in part because we've got a very, very high commission rate relative to price value in the market. But coming back to the kind of thesis that I'm laying out, if you're thinking about how far can you go in pushing up the ceiling, we're taking 0.14% of the house price a marketplace is taking. It's tiny as a percent, and it's in a world where the agent takes 2%, 3%, 4%. So I think it's very unlikely that we're anywhere near the ceiling on take rates at this stage. Another interesting thing about this chart is that, we've seen on the chart that Malcolm presented, REA way off the side in terms of monetization. But here, it's kind of in exactly the kind of same kind of relationship to the other portals in terms of a number. So I just want to explore the vendor paid thing a little and maybe answer one of those questions that came up earlier. So if we look at, and this is a different variant on Malcolm's way of looking at per population, this is taking a look from 2000 right the way to 2023 at the per capita revenues of REA, Scout24 in Germany, and Rightmove. And you'll see that Scout and Rightmove, pretty consistent performance over 23 years or so. Whereas REA, massively faster in its growth over that time. What did you buy it for? You bought it for, you were fundamental in the purchase, weren't you? And you bought it for what? A couple of $1 million for 44% back in 2000?
42% for $2.25 million.
2.5 million, which is an amazing kind of, track if you think about it. But you can see that in 2023, the per capita revenue of REA is 4 times that of Rightmove or Scout. And the question comes up, how much of that is down to vendor paid and how much of that is down to other conditions in the market? So we do a piece of analysis. It's got this big approximate stamp because it's not a perfect piece of analysis to try and break down how that works. So actually, the average home price is 80% higher in Australia. It's one of the highest, most expensive property areas. That's a huge contributor into the difference in ability to take revenue out of the market. So, you can take your 0.14%, similar to Rightmove at 0.111, but your property price is 80% higher, so you're taking inevitably more money. Second, the Australians really like to trade their property. So, they have 0.023 trades per capita every year, whereas in the UK we only have 0.014. Now that means there's 60% more money on the table for marketplaces to take from more trades on a per capita basis. The number of trades going through agents, significantly higher. The UK figure's hard to gauge, not perfect, but that adds a little bit as well. And then you come down to that difference between my 0.11 and 0.14 for Rightmove and for REA. Because actually, this is the bit that fundamentally looks at what vendor paid might be doing and other factors in the market. So once you've taken out the effect of the home price, once you've taken out the more transactions, once you've taken out the difference in volume going through agents, what you're left with in part, in significant part, is the impact of vendor paid and other things. So, our view is probably the impact of vendor paid is material. If anyone said you're going to get 40% more from doing vendor paid, and I don't say 40% as a perfect number, you'd be very happy. It's definitely there, but it's not the thing that gets you to 4x in totality. There are some other bits and pieces in the calculation, but we won't worry about them. So, coming back to the main thesis, so about revenue growth. When we look at revenue growth, the companies we have 10-year data on, because they're public and the data records are pretty good, we go back, they've had phenomenally good, double-digit, except Immo Scout, all of them, and some of them materially higher than that. I mean, Zillow started late, and Zillow is a kind of late developer as such, so that's why it's got such a good 10-year CAGR. If we look at the last 5 years, you can see we're also still in the double digits side. So actually, Zillow's growing double digits still. Hemnet is still phenomenal because it's at a much earlier stage, growing really well. REA around 11%. This is taken to the year 2023, and it had a bit of a blip in 2023 because the market was difficult. And these 5-year figures, you've got to remember, have COVID in the middle of them, and they have 2023 when transactions fell in most countries. And still, they're churning out double-digit growth comfortably. Rightmove's a bit of an oddity. It had a really bad COVID, went down far more than anyone else, came up less on the recovery. But actually, the last 2 years, it's been at just over 9% in growth. So actually, it's really double-digit coming out of the period it's in at the moment. So, coming back to can I believe that we're going to get double-digit profit growth, and this is revenue growth, and profit growth should always be a bit faster than revenue growth. I think the numbers kind of support it pretty clearly in terms of the trajectories and the ability to sustain these kind of growth rates over time. Resilience through economic cycles. Well, I'll let the numbers speak for themselves. These are the ones that we have long tracks on the revenue. Where is the global financial crisis? Only Rightmove kind of took a little bit of a hit from it. 2023, in some countries, sales volumes were down, home sales volumes were down as much as 30%. You can see the 3 European companies didn't even touch their revenue in any way. And you can see for REA that though it took a blip in 2023, it recovered that and got back to its original track quite comfortably in 2024. So there are lots of reasons for resilience, but I think we can be reasonably confident that portals will stay resilient. So how are they doing against number twos? Another little bit of data. Unfortunately, there aren't enough companies to do this very easily with, where you've got good data on number one and number two revenues. But fortunately, we have REA, Zillow, and Rightmove. And this shows, first of all, in the green, you've got the revenue multiple. These are dominant players. They're 3 times or more the revenue of their number two. You can see in blue the growth rate of the number one over the last 5 years, and you can see in yellow the growth rate of the number two. It's pretty consistent, and we're sure it would apply to most other dominant, strong number one marketplaces, that the number ones are pulling away continuously from the number twos. There is, of course, always an exception to prove the rule, as we say in England, and by prove we mean test in English in this sense. Immobiliare is the oddity, not Immobiliare, Idealista versus Immobiliare is the oddity here. But a huge chunk of the growth at Idealista in Italy came from the acquisition of Casa. These two are now neck and neck, and it's going to be interesting to see. I mean, usually somebody makes huge mistakes for a number two to overtake a number one. It's going to be interesting to see if this one is one where actually maybe there weren't many mistakes on the number one front, but the number two has found a way of doing it outside the kind of normal curve. So I think it's pretty clear that number ones are very resilient against competition. So last point really is AI. Normally I have a kind of 40-page deck for this, and I found it very hard to compress it into a single slide. I don't think any of us know where AI is really going to do in kind of 8 to 10 years. But in the our view is that consumer adoption of new models will be slow. Actually, current portals do their job very well, and people are very familiar with them and use them, so it will be a gradual thing, and that's helpful to the portals against meeting any AI-based challenges. The technology is going to take some time to mature. I mean, Gartner still puts it as 3 to 4 years off being a technology in general use in mature products, and I think that's the case, and then we'll see further development beyond. And there's a whole big bunch of reasons that a portal has that protects its business overall. So, our view in total, just to sum up, ceiling on take rates still a long way off. We think you can still grow EBITDA at dominant number ones at over 10% consistently over the next 5 years, and there'll be good growth beyond that as well. Definitely resilient through economic cycles. We're not seeing any difference, and maybe CoStar will change this. I mean, CoStar is the first time somebody's had that kind of firepower to throw at the challenge from down below. And we don't see a huge threat from new technology. So to sum up, it feels to us that those high multiples are still fully justifiable within the context of this kind of M&A. And I'll leave it there.
Sorry about the slight little technical hitch there. Don't know what's happening there, but we'll sort it out. Let's have a couple of quick questions. If ceilings on take rates are not yet reached and there is a long way to go, is it really necessary for classifieds to go into transactions targeting larger take rates of 20 to 30%, but it comes at a lower EBITDA margins? Or is it better for classifieds just to continue to monetize and push take rates higher in the current models?
So I think we would argue that your core focus has to be on the core. That doesn't mean you shouldn't be doing other things, but actually, where do you want to put your effort and your best people and most of your investment? It's actually on driving your core revenue from agents and other professional parties.
Okay. Which successful strategies you saw the number 2 or 3 applying what are the successful strategies do you think that number 2 or 3 can do to actually put pressure on the number 1?
So the reality is there are very few successful strategies. There's not much you can do functionality-wise, because then you just become the R&D kind of partner for the number 1, and they look at what you do and replicate as soon as you've done it. What you've got to hope for is that the number one isn't very savvy. So where you see overtakes, it's where the number one, say, has continued to really push rates, and the number two has held back, kept its rates down, and really kind of brought the agents on board in a coherent way. And they've been lucky, and the number one hasn't really realized what's happening and hasn't reacted. But I'm afraid, number two's taking over number one's. All the history shows it's the number one screwing up, not the number two doing something clever that makes it happen.
And I think if anyone wants to do a case study, go look at Italy, because Italy is a fantastic case study around this. Back in 2005-06, when I was at the REA Group, we acquired Casa. Casa was the market leader at that point in time. And then around 2000, and this competitor, which wasn't called Immobiliare, but they changed their name to Immobiliare, overtook them basically in 2010, maybe 2011,
yep.
around that time frame, and then they sort of tore off leadership. Then Idealista entered the market,
yep.
and then Idealista became a very strong number two,
yep.
as Casa went to number three,
yep.
and then Casa was acquired by the number two to now
yep.
make it a very competitive market again.
Yeah.
But I think if anyone's out there with a marketplace and they're thinking about where should I look at, what can go wrong, go look at Italy. I'm more than happy to have a chat
yeah.
about my perspective on what went wrong, having lived it.
Casa is the case study for what not to do as a number one.
Yes.
And it's going to be interesting to see whether Idealista, they're neck and neck at the moment, whether it can actually win out. It's the most interesting attempt we've ever seen to take a number one position, and it's a real battle at the moment. And
so on that thought, can Homes.com in the US with CoStar, actually really threaten Realtor.com, let alone Zillow, on the market in the United Kingdom with Zoopla? Is there any chance from going from number 3 to number 2 in those markets?
So I think there's more of a chance of a number 3 taking number 2 in the UK. I don't believe that Homes.com is a threat to Zillow at this point in time. I think the American situation is much more interesting because there is a change in model, there is a different appeal to agents, there is a different way of engaging with consumers. And so you're trying to change the business model and attack the number one by playing a different business model. That's always a more interesting strategy. I think my American colleagues are skeptical, given the way that Americans buy homes, that will have a long-term impact. But we'll wait and see. The UK, it's much more difficult to see because we're not seeing a change in the model, and it's hard to see how you play a change in the model that would really kind of undermine what Rightmove is doing. Yeah,
and I think the one thing that's missing from those charts that I would think about is you can look at the take rate per property sold by portal.
Yep.
But now do the total take rate
in
per
the
property sold in the market
yep.
to see how those numbers change again. And I think you'll see that clearly they're going to be higher because
yeah.
you're adding multiple players together. And B, the question is how high can that go before someone's going, no, that's too much of my house
yeah.
being given to someone else.
But there's also an important point there is that the number one is taking share from the number two, taking money from the number two. So actually some of the money isn't coming from the agent as such, it's coming from the competition.
Yeah.
And I think, sorry, just lost a thread of thought there.
Actually, one other thought which I think related to that, and we've seen in the Australian market, as REA has pushed the prices up, it's actually sucking oxygen out of the room.
Yep.
And a lot of properties are then not as much as being spent on domains. So that's why you see domains revenues down
yep.
or flat, basically, and REA's gone up. It's not because domain's not trying, it's just purely because the oxygen's been sucked out of the room.
Yeah, I think there are a lot of people in Australia, and I was down recently in the market talking to people who would argue that Domain hasn't executed as smartly as it could have as well.
We're going to talk about that tomorrow.
Coming back to the UK for a second, I think one thing to think about is, having bought on the market and putting money into marketing, etc., and challenging, Zoopla is the one being hit by that. I wonder what's happened to Zoopla's valuation over this period, and is Zoopla now a much cheaper asset to buy than it would have been 2 years ago.
Probably.
And could that be part of the rationale for where the strategy is going?
It could be. One last question, because 10 people voted for it. Okay, they had voted for a second. Geez, you've got to be quick in this world, haven't you? Okay, let's do these two very, very quick. So short answers, please. How do you define numbers 1, 2, and 3? Is it solely based on revenue or EBITDA, but also do you look at traffic? And does it matter about traffic?
So we always try, if we can, to do based on revenue. 1 to 2 is normally very easy because certainly in mature markets, there's usually a huge gap. 2 to 3 can be a bit closer, but usually it's pretty obvious. But revenue where possible. Traffic is actually not a bad proxy for revenue a lot of the time. So you can rely on it to help you guess where things are, but sometimes you screw up when you do it that way.
Okay, one last very quick question. Do you think consolidation and internationalization of the market will result in a scenario with only a few dominant players, similar to tourism or Airbnb, etc.? If so, how long is that going to take? Or will it be local market players?
So I'm sceptical of the internationalisation. I think retrofitting common platforms, I mean, it's different if you're Idealista and you built on one platform from the beginning. Retrofitting a common platform to a group, changing the models. I mean, we did some work last summer looking at European portals. Everybody sells commercially in a different way. Everybody manages their commercial relationships in a different way. How you harmonise that and adjust it and bring it together, it's really hard to see that play out. So I think, the markets are very different. I think we'll continue to see strong local players under their own guise and often on their own platform, even if they're part of a group.
Okay, fantastic. Thank you very much.
Pleasure.
Okay, I'll take that. Actually, can you take that with you? Do you have the remote control? No. Jonathan.